What's going on, guys, and welcome back to another very exciting video. I hope you guys are going to enjoy this one. We are going to be talking about Amazon stock, and we're going to do something similar to what we did in yesterday's video. If you haven't checked it out, go check out the free cash flow video that we did on Google yesterday. Very good video, especially if you are interested in Google stock and interested in where it could be going over the future. But yeah, go check that one out. In this one, we are going to be talking about Amazon and where its cash flow is sitting at currently and over the past couple of years, where it's been at, and we're going to do a quick free cash flow analysis on its growth and where it's been at, and then we're going to take a look at kind of the troubles that Amazon has actually seen and how that kind of affects this analysis. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. To start off, let's look at Amazon's chart. So they are down to $89.09, which is absolutely insane. They're down 4.2% over the last 5 days. Over the last month, down 11.61%. Over the last 6 months, down 14%, and over the last year, they are down almost 50%, which is absolutely insane. We can see that the stock is actually very close to its 52-week lows. We can see the 52-week low right now is $85.87, and if the stock continues its trend that it's on right now, it could easily break through that in the next couple weeks, and we could see a new 52-week low be hit. Before we jump into the free cash flow analysis, I wanted to take a look at some of Amazon's metrics, in specifically their forward PE ratio, because they have traded at a very high valuation for a very long period of time. We can see that right now they're sitting at a 43.86 forward PE ratio. They have, over the last couple of years, actually been above a 60 PE ratio, which if you read and have read The Intelligent Investor, Benjamin Graham in that book actually talks about a 60 forward PE ratio being unsustainable over a long period of time. So that obviously is a little bit concerning, but it's good that they have, established a number below that. I'd love to see Amazon actually get down to like a 25 forward PE ratio, because that gets them more in line with the value that you're seeing and having to pay for a lot of these other big tech companies like Apple, Microsoft, Google, and Meta. So overall, a little bit high of valuation when we're actually looking at its forward PE ratio. The other number that I wanted to pull, I'm not going to go in depth on how I'm doing the calculation. I did that in the Google video, so again, go check that one out. But we do have to pull from Yahoo Finance the outstanding shares, which is sitting at 10.2 billion outstanding shares. So there's two very important things to point out here. One, so this is Yahoo Finance's number for Amazon for their free cash flow. So what we have is the trailing 12 month. They're sitting at negative $26.3 billion, which is absolutely insane. For 2021, they were actually at negative $14.72 billion. For 2020, $25.92 billion. 2019, $21.65 billion, and then 2018, $17.29 billion. What's very interesting, again, to point out is right now they're sitting at a negative trailing 12-month free cash flow. We're going to, at the end of the video, take a look at why that is and basically explain how Amazon really needs to get out of, the situation that they're in, because there are a couple things that could change that really could affect this number. But the other thing that's important to note is these numbers are actually different from what I've seen on a couple other sites. So I did want to just point this out, because it's always good to double check your numbers and see what the difference is, between Yahoo Finance and then also, some other websites. Specifically, I do like this other website that we're going to jump to here, and that's Macro Trends. So Macro Trends I've used in videos past. They have a lot of good information. And actually, when I looked throughout the web, I ran basically a Google search on it and looked up all of the, looked at the first page of the Google results. And basically, these results actually matched a couple other websites. So they are different than what we saw on Yahoo Finance. You can see here that they have $31.02 billion for 2020, and then $25.825 billion for 2019, and then in 2018, 19.4, and then in 2017, which Yahoo didn't have, just because I don't pay for the premium, they have $8.3 billion. So we're gonna basically put these numbers again from Macro Trends, just because again, I confirmed them on a different website that they matched up with Macro Trends and not with the Yahoo numbers. Here we have the free cash flow analysis, and what we have done is we have kind of messed with the numbers already, because they are not not good when you look at Amazon. What we can see is I put in $30 billion for 2021. If you look at macro trends, they have actually minus $9 billion. And if you look at Yahoo Finance, they have minus $14.7 billion. So we are actually already adjusting the numbers to try and make them make sense. So we put in $30 billion for 2021, and even with $30 billion in this free cash flow, we can see that the price per share should be around $20.22. So that is absolutely insane. If we actually swap this number out and we swap it out with the lesser of the two, the minus $9 billion, we can see that the stock price actually should fall to around $13.33. So this is absolutely insane, really what we're seeing. And this is only a 10% margin of safety and a 10% required rate of return. So if we do drop this number, to a 5%, that's obviously going to have a bigger effect if we are only requiring a rate of return of 5%. But right now, if you're only requiring a rate of 5%, you might as well put your money in a CD, because you're seeing CD rates go, all the way up to like 4.5% right now. And even if we bump this number back up to that 30 billion, you can see that the price per share should still only be around $40.43. So this is absolutely insane. The one thing that this model does not consider, and to keep in mind, is share buybacks, which again, there's 10.2 billion shares. If they buy back even half of those, the stock price would double. So if they buy it down to 5 billion shares, the stock price would go up to $82.48. But I don't think Amazon is in a great position to be buying back a large portion of their shares right now. The next analysis that we have here, we could see that basically what I did is I took 2023. I said, okay, let's see if they can match maybe their cash flow that they got a couple years ago of $31.02 billion. And then we did a 5% decline, just saying, okay, maybe the business is going to decline a little bit in terms of free cash flow over the next 5 years. And what we could see is we actually come to a price per share of $24.77. So absolutely insane. Again, this has the 10% required rate of return and a margin of safety of 10% factored in there. So very low and significantly lower than the share price that we're seeing right now of almost $90. And the last analysis that we have here is actually a growth analysis. So we are going to say maybe they can grow their free cash flow by 15%. So maybe they get back on track, they turn the business around, they get to that $31.02 billion in 2023, and then they grow by 15% year over year for the next 5 years, their free cash flow, which isn't really out of the realm of possibility. What we could see here is this is the growth down below. So you have the year over year quarterly growth, and you can see that in 2018 they actually grew, from 8 billion to all the way up at 19.4 billion. So that was 133% growth. And then you can see 33% growth from 2018 to 2019, and then 20% growth from 2019 to 2020. And then obviously they had a negative growth here to 2021 when the number falls negative. So honestly, 15% doesn't seem out of the realm of possibility. It seems like they probably could grow their free cash flow again if the business gets back on track. But even with that number, we can see the average free cash flow comes out to 41.83 billion. And what we do is we reduce that by 10% down to 37.65 billion. And we actually only get a price per share of 36.91 or $36.91. So absolutely insane numbers that we're kind of seeing here. Basically, in this best case scenario, the business gets back on track. They see 15% free cash flow growth over the next 5 years. That even then the stock is valued at half of what it's at right now. So really, Amazon needs a lot of growth vectors in front of it to really boost a lot of these free cash flow numbers and really increase its revenue significantly over the coming years to really warrant the stock prices that we're seeing for the company right now. Obviously, a lot of those numbers we just looked at were not very promising. We saw, numbers basically from $20 all the way up to potentially $40, even in the good case scenarios where Amazon could be valued at. And honestly, they've been going through a relatively rough time. I actually like the stock. I think there's a lot of potential in front of it. I just want to see the valuation get to something that in my mind is more reasonable. I would love to see Amazon get to a 20 to 25 forward P ratio. That is where I would get very interested in this company. because I think you're taking a lot of risk with very minimal reward when you're looking at Amazon and purchasing at these prices that we're seeing right now. Right now, I mean, they've just been suffering from some issues. So obviously their free cash flow has been in a lot of trouble. It was negative 29.3 billion over the trailing 12 months. And this article, just keep in mind, was published in May 3rd of 2022. So that kind of goes over what Amazon has kind of seen over the last few quarters. And the biggest thing has been, some high shipping and inflation costs that they had throughout 2021. Obviously, there was incredible inflation throughout 2021, and companies were no different. They really focused on trying to keep their costs low for the end users. And I can respect that, from Amazon. They didn't really raise a lot of prices. I think they might have raised their Amazon Prime membership, but honestly, everyone was raising their prices. So the CFO even said that both external and internal controllable costs have experienced a sharp increase. Amazon said its air and ocean shipping rates were at or above rates in the second half of last year, where they were much higher than their pre-pandemic levels. So basically, a lot of shipping fees, a lot of personnel costs. What we're actually going to look at here is that Amazon has been one of the top offenders in terms of adding to their employee force. So we could see that back in 2019, they actually had under 800,000 employees. And then now by 2021, they doubled that number. So that is obviously going to have a huge cost effect on the business overall. And, that's part of the price of trying to grow and continue its growth. But at the same time, doubling your workforce in a very short amount of time, have they really added that much to their experience, over the same 2-year period? I would argue probably not. And they've already started laying off some people at the higher levels. I'm wondering if that's going to continue, and if maybe even some of these warehouses, they might kind of try and focus on being more efficient with their warehousing, because right now they've kind of focused on just expanding and being in every city to really get that, next day delivery. But at the end of the day, if it takes one day, 1 or 2 days to get a package, is that really affecting and adding an incredible amount of value to the final consumers? That might be a question that Amazon really needs to look at and evaluate further to, decide whether these costs are worth it to the business. So overall, again, I do like the stock. I think it's going to be interesting to see where the valuation goes over time. I think at some point in the next 5 years, Amazon is going to be down to a 20 to 25 forward PE ratio. That is just my feeling. And at that point, Amazon could be a very interesting buy. I'd love to have them, start providing a dividend as well. That would be very interesting, but obviously they need to get their free cash flow back in line before they can really start making those steps forward. So overall, again, I'd love to hear your opinion on Amazon stock. Let me know if you're a buyer at the current price levels, or if you want to see it go lower. I'd love to hear your opinion. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.